IVM.
Folks, welcome and thank you for joining us on this episode of the Ideas Project, a limited series by Smallcase. I'm your host, Anupam Gupta, and today we are joined by Arvind Kothari, the founder of Niveshaay and an investment expert. Arvind has over 12 years of experience in equity research and investment advisory and had started his career as an Industry Research Analyst at ICICI Bank. He's also well-versed with the wealth management industry, making him the perfect guest to talk to us about ESG and green energy. How important are these non-financial factors of environmental, social, and governance for investors nowadays? How do applying these to your process of analysis help in identifying material risks and growth opportunities? What are these growth opportunities in this sector? Stay tuned till after the break to find out.
If you're a cricket fan, check out Edges and Sledges, India's favorite cricket podcast.
The podcast focuses on Indian cricket, the IPL, and has a ton of banter both on and off the field.
We talk about the week's biggest cricket stories with current and ex-international cricketers, coaches, or sometimes just between us.
And it's hosted by me, DJ.
Me, Varun.
And me, Ashwin.
New episodes release every week.
You can catch us on the IVM Podcast's website, app,
or wherever you get your podcasts from.
Check out the Edges and Sledges Cricket Podcast.
And welcome back. Arvind, welcome to the show.
Thank you.
Thanks for doing this for our listeners. So, Arvind, the world is undergoing this major energy transition. Currently, talk to us about this transition and how it affects India in the near future. Are we expecting a boom to be in this space thanks to this transition?
So the transition is very evident post-COVID. Even before COVID, there were a lot of steps specifically taken by the Eurozone. But what has happened post-COVID, most of these countries around the world, they've made targets around where they want to go net zero emissions, right? And if you look at the investments that are happening in most of the, spaces, whether it's solar, whether it's, nuclear, whether it's wind energy, there is a clear shift that people are talking about and also implementing. It's the first time when we are seeing funds taking action in terms of categorizing the investments, whether there is an ESG compliant, investment happening or not. And the resultant effect is that if you look at the whole, solar space is experiencing a growth of 20-25% per annum, which is almost zero for the fossil fuel industry. And the overall installed capacity in the world has gone up from just 230 gigawatts to around 850 gigawatts last year and is expected to go to around 2,800 to 3,000 gigawatts by 2030. Within the scheme of things, if you look at India, surprisingly, we have been able to achieve our goals also, where our Prime Minister told that we are going to achieve 100 gigawatts of, solar energy way back in 2013-14. It was completely unbelievable because we were just 2.5 gigawatts then, but we've gone almost 20x and now we are at 60 gigawatts. And our plan in India is to go to around 300 gigawatts by 2030. And that is something which is in a way looking reasonably achievable because corporates like Reliance have pledged that they'll invest around 6 lakh crores in various projects from green hydrogen to solar energy. And if you look at, there has been a lot of shift towards government policy in terms of, also PLI, which they've announced they'll be spending around 50 to 60,000 crores for these kind of initiatives, which will enable, a lot of manufacturing of solar panels in India, a lot of green hydrogen in India. If you look at, policies like even encouraging, first of its kind, hybrid energy plants in India. So what is happening is that India in a way is becoming center stage to just not manufacture solar equipments for our own country, but also to export because the whole world is telling about, China plus one as a strategy. And if you look at the solar eco chain, everything is being manufactured by China. We are just assembling, right? So if solar panels are getting manufactured more in India, solar cells are getting manufactured more in India, we will also become an export hub. And that is where European nations are already in touch with a lot of corporates in India, which we are, experiencing that they will be tying up with them to source their material requirements. So the shift is very much there and it is now now on ground visible. And the coming years would prove whether this is sustainable or not. But right now, every aspect that we are looking at is hinting towards that it's a large change that the world is seeing after many, many years. And there have been mandates by European investment banks where they will not be financing any, fossil projects for that matter. And there's a very big, you can say, interest cost now, which would be, applicable to projects which are, fossil fuel projects. And for ESG projects, there's a very big rebate, you can say, or they're getting money at a cheaper cost because of these funds which are chasing these assets, equity or debt. Both instruments are being funded at a very low cost for the ESG projects, and non-ESG projects are facing the brunt because of, high cost of financing.
So nice comprehensive answer there. Arvind, two questions here. ESG and investments. What's the ESG impact on investments? Is it something that does ESG actually affect the value of an investment? And, how does ESG actually create business value? Let's look at this from an investor's angle.
Yeah, so that's a very important question because we are not here for charity, right? The world only believes in ideas which are profitable at the end. And we've seen a lot of mishaps also in this whole ESG, bandwagon, where there are a lot of, you can say, things which are being done just for the sake of ESG and which actually is not contributing any value to the world. But if you think from a perspective that ESG basically is telling you sustainability should come via the whole environmental standpoint, the social standpoint, and also the governance standpoint, which improves the longevity of any business. So if you think about valuation in stock markets, when we value any company, it is the P multiple that we assign to it, right? So what is the price earning multiple, which basically is, the number of times value that I'm giving to 1 year's, earnings. That definitely would be given more to companies which are ESG compliant because the risks in the business are less, right? Because if the government is, thinking that the business is environmentally compliant, it will not, harass that business more. If it is socially compliant, then the communities would support it. It will get workforce which is, talented, and they will enjoy the work environment. And also the impact on the, governance end would make sure that there are no corporate frauds. So that will increase the P multiple that I assign to a company which is, ESG compliant. And hence, like to like, if two companies are going for an IPO or maybe listed in the markets, if both have 100 crores of pool of profit, one would be maybe valued at 20,000 crores and the other would be valued at only maybe 500 crores or 1,000 crores because of non-ESG compliance. Its sustainability is a question mark. So that is a very big differentiator in how valuations or wealth creation is happening for promoters who are running these companies, right?
Yeah. Very interesting.
Yeah.
No, so go on. Sorry, please complete your answer.
Also, in terms of sales, for example, right? So a lot of these ESG compliant companies are recording higher sales than non-ESG compliant companies because even customers these days, for example, in textiles, if you're using a recycled fiber, for example, Levi's did an ad that your jeans is made of polyester bottles, right? So what it is converting is the PET bottles into fiber, and that is creating a jeans. And that has a higher affinity for the customers because they feel that they are, doing good to the environment by consuming it. Now, these are early trends, but definitely it is also, pushing sales for a lot of companies where they are showing ESG compliance.
How is the, India's overall energy sector looking to you? It's already pretty hot in terms of attracting foreign capital, foreign investment. So is there anything that can change it and make it more exciting? That's the first one. And the second is that what is the overall universe of such stocks in India? So sector level, stock level, probably listed, unlisted, whatever it is.
Correct. So if you look at the overall basket of, investments that are coming in India, and surprisingly, one of the largest, you can say ESG compliant, group is from India, which is the Tata Group. And if you look at investments in solar, for example, it's roughly around $200 to $300 billion of investment that will come in the coming 5-7 years. And also in the EV space, a similar amount is expected to convert our vehicles into EV. And if you look at even biofuels, so the fuel consumption that is happening, the government also wants it to be blended with ethanol. So the current blending, which was, maybe just 4-5% in 2014, has gone up to almost 11% last year and is expected to go to almost 20% the government is planning by 2025. So if you think about solar, wind, biofuels, electric vehicles, hydrogen, these are the pockets of investments which we feel would attract a lot of capital. And if you look at the winners in the stock markets also in the past 1 year, for example, a company called, Borosil Renewables, which is making solar glass. It is now become one of the largest, facility outside of China in the world, and is almost doing its capacity, growing its capacity by 10x. It was making just 180 tons a day 2 years ago, and by 2024 it will have almost 2,000 tons a day capacity. So that company's market cap from just 1,200 crores when we wrote a first report on it is now around 8,000 crores, and a lot more mutual funds and a lot more investment banks are chasing it for giving it the growth capital that it wants. If you look at a company called Sangvi Movers, which is into providing cranes for setting up wind farms, their complete capacity is booked out after 8 years. So 8 years they were having surplus cranes, and this year every crane is on ground and deployed, and they are now ordering more cranes from Germany so that they can maybe install more wind farms. If you look at a company called MTAR, which is supplying, hydrogen box and supplying a lot of equipment to, Bloom Energy in the US. So there's an export opportunity which is, coming up via companies like MTAR, and it just did an IPO a couple of years ago, and again is being, given a very high valuation in the market because of the business that it is doing. Also a company called Praj Industries, which is in fact the leader in Asia, in fact the whole world, in making these ethanol plants. It's the largest engineering company in the world. And if you look at the company had, almost 9 years where it did nothing. And the market cap has gone up by 6 times in the past 2 years alone because of the government's, impetus or complete focus on, getting the blending target to the 20% that it has decided. So these are the kind of opportunities which have come up, and that has, even benefited the investors who identified these trends and invested. In unlisted space, we did an investment in a company called Navitas Alpha, which is manufacturing, solar film. So as you think about a solar panel which has glass on the upper side, it has a thin layer of film which is attached to the solar cell so that it is protected and the cell doesn't get destroyed, or the cell gets the adequate amount of UV rays, and also it protects the cell from the external environment if the glass breaks, right? So that, again, there were only 4 companies in India which were making these films, and 90% of the films were being imported from China. From that, now we are moving towards almost 80% of the films being manufactured in India in the coming 2 years. So these are throwing opportunities in terms of listed and unlisted both worlds, and we are very excited about India's future in this, because we are the only country outside of China which is giving this hope to the world that we will also be a very big material supplier for solar glass, solar film, even panels for that matter, wind farms, wind turbines, and green hydrogen.
Any concern on the high level of indebtedness in some of these companies?
There is, and in fact, if you look at the biggest amount of wealth destruction has happened in the so-called environmentally, faced companies. If you look at a company called Suzlon, for example, or Mosaber, these were the 2 largest companies which were there, focusing on solar and wind for the past decade, and they went bust. But this has happened in any sector which is emerging. If you look at the tech bubble of 2000, that happened because the initial round of companies didn't know how to make cash flows, and every .com company went bust around the year 2000, and there were only few survivors. But the companies which survived, like an Amazon or a Facebook, they made almost 100x or 200x returns in the coming 2 decades. So similarly, if you look at in the space of green energy, in the space of hydrogen, in the space of all these ESG compliant companies, there have been accidents in the past. And this has given a lot of entrepreneurs this understanding that if they don't focus on cash flows and they just keep on dreaming about these concepts at a high level, this is not going to work. And that is where surprisingly we've had, successes like a Borosil Renewable, even now Reliance talking about. And investment by Reliance is very important over here, because if you think from the perspective what Reliance has done over the past 3 decades, they've always gone into any sector once they feel that all disruptions have happened, right? For example, in telecom, when people were disrupting themselves, that is when it entered and it completely captured the market. And now we are seeing Jio as a huge success and almost like a monopoly in the data world, right? So Reliance's entry proves the point that, they feel that the sector is now mature and they always go after mature sectors. They don't invest in sectors till they feel their, technological maturity has not arrived. So very important things have happened in the past 2 decades, where technological maturity, also scale of operations, also the global focus has made companies more cash flow positive. And when companies become cash flow positives, then the chances of their, going down reduces by a lot.
Okay. Arvind, let's talk about the policy side. Largest amount of government revenues come from the older, the
Correct.
fossil fuel sector, cess, surcharges, etc. So how does policy need to be thought of now to figure out what's good for the planet is also good for the economy?
So that's the dichotomy as a policy maker, because if you think about in the longer term, what you need to do would completely, throw your finances out of the window, because almost 30% of revenues at the central level come from these, fuels which are traditionally or the fossil fuel economy. And that is a big blow to the government exchequer if we think about that. But in the longer run, if the government is able to manage the ship well, I mean, it cannot over invest in the short term and then face the revenue loss and then need to, go to the foreigners to, borrow more money. If it plans it properly, there can be a lot of savings too. So if you look at the coal imports in our country and the fossil fuel imports that are happening, we can save on them in a very big way, and that can go to fund these projects. And if government plans it in a good way, a lot of foreign funds, in fact, look at the India market and they want to bring the capital investment over here so that we can be a net provider of these things to the world. So that investment can make the exchequer also richer by maybe a few $1 billion. But then that has to be managed well. If that is not managed well, there have been again accidents in the world where countries have faced the trouble because of being early into the game.
Yeah. Let's talk about some global trends. Arvind, when it comes to ESG, for example, so one conversation that's happening globally is it a fad or a shift? A lot of funds are being launched, a lot of assets are moving. And then you've got, large asset managers like BlackRock asking listed companies to work on their ESG goal. Larry Fink apparently wrote this letter. SEC has also asked funds to not mislead on ESG. What's happening globally? What do you think?
So globally, there are there are a lot of things which, in a way, are shaping points which we should consider in terms of how ESG should be thought of. Because till now there is no global standard which makes ESG as a measurable, you can say, index, or there are no standard formats which people can maybe assign and then try to figure out whether a company is ESG compliant or not. Larry Fink very famously has said that the next 100 unicorns are going to be companies which will be into the green energy space. And that's where, if you think about what is happening is a lot of companies are also using this for their advantage in terms of defrauding their investors, or maybe greenwashing a lot of things where they are saying it's ESG but they are not complying any standards. They're just using their firepower to make the agencies report their ESG scores and things like that. So a lot of things need to be sorted in terms of actual scoring of these matrices. And if that is done properly, which should happen, and anything when it starts, it has these teething issues and which we are going through in the world. But it's definitely not a fad, because if you think that globally it has become almost impossible to fund a non-ESG project at this point of time. That is the large mandate that most of the investment banks, most of the governments and the government banks have had around the world. So that it's a ball that has been sent to a momentum, and I don't think there's a going back that your economy would go back to the old school measures. If there are some issues in midway, they'll try to figure those issues and solve them. And there are a lot of issues that need to be solved. And as in when the world is realizing them, there are things that have been suggested, and there are pragmatic approaches towards them. And large money, when it gets committed to a particular theme, generally we've seen eventually that theme wins. So if it was, the connectivity around the world or the internet of things around the world, though there were several bankruptcies, it was unthinkable in the year 2000 that we'll come over here to the kind of, front page news that were going around. But we are here, right? The world is more connected. A lot of things the internet is, driving. And that is where we feel that all these teething issues would also have their answer and the fad would not materialize.
Longer term. So, talking about longer term, what are the implications of renewable energy now being cheaper than conventional, traditional fossil fuel based power capacity? What happens to the competition, and how is this going to shape out?
So I don't believe that, you can have a worldview which you can, force on everyone just because solar is cheap. You should have solar everywhere, because it depends from geography to geography. It also depends from the point of view of the resources that are available. I'm not a big fan of people who are saying that everything needs to go to solar or everything needs to go to wind or hydrogen, because you would have to have a mix of these resources for a long period of time, and then only you can make a shift which is more sustainable. If you look around what is happening to the grids around the world, they are collapsing if they are being injected by more solar or wind, because it's an unsustainable power, right? Our grid infrastructure needs to get modernized by a large extent till we are, producing 100% of renewable energy. So I don't think that just cost is of matter over here. Even stability to the grid, the quality of the power that is getting manufactured is very, very important. And that will have a lot of, thermal energy still being dominant in a lot of geographies, and it will only come down gradually. There cannot be a complete shift is what I think. Cost maybe can be a driver of profitability in the short term, but in the longer term, the mix of the grid would be far more important.
Yeah. So wrapping up this episode, Arvind, let's talk about things that affect the listener or the investor directly. For example, when it comes to green energy, or let's talk about ESG as a whole, what are the major sectors that will benefit India and any company that you think are actually leading this transition?
Correct. So if you think from the sectoral point of view, you look at what is happening in Germany right now, where it was completely dependent on external source of energy, and every sector right now is in doldrums, right? If you look at German chemical sector, the machinery, engineering, every sector which Germans were known for, currently is now, their business is shifting to either India, China, or all these countries because they are facing a severe shortage of gas. So if energy mix is proper, every sector in the economy benefits, because most of the sectors are energy intensive. You think about building materials, you think about steel, the basic materials, you think about any sector. And if at all India can get its energy mix right, we can be the next manufacturing superpower of the world easily, because China subsidized its power for so many years, and that's where it got the benefit of cheap power, cheap money that the government gave, and cheap labor. But now China doesn't have all those advantages, right? We as a country have made a very important step in the right direction when it comes to our energy mix. And that is why our energy costs surprisingly are one of the lowest in the world. And in a scenario where governments around the world are facing with blackouts, I think we had very small or very few issues in few, states. Barring that, India did very well in this turbulent phase. So most of the sectors benefit, and it in a way gives a competitive advantage for products to be manufactured in India. If you look at groups perspective, Tata are by far the best groups for the ESG compliance. In fact, they're just not number one in India, they're number one in Asia for that matter in the rankings, and followed by Mahindras and ITC. So if you look about ITC, you'll say a cigarette company, how it's ESG. But it's manufacturing practices, it's employee environment around its communities, also the rural areas that they are serving. They are doing a lot of things which are net ESG positive.
And finally, for our listeners and people who are getting started in planning their ESG investments, what do you think are the major factors that they should consider?
So a lot of ESG scores are available, but I'd say these ESG scores are very nascent, and how they're structured is still, very perplexing, because you'll find a lot of companies which are ESG compliant. And if you look at it, the score just is throwing a number which doesn't mean anything, because when you go towards the working of the company, there'll be a lot of things that you feel that these are not ESG compliant. Still the scores are high because of certain matrices, right? So though the scores are emerging, you should not rely completely on the scores, but you just think about if a company is, environmentally, doing things for maybe deforestation, or the company is maybe, also planning something to increase the yield of maybe the crops that are being produced nearby the community, whether they are doing things for reducing the pollution of, the water treatment plants they are putting, whether they are putting flue gas desulfurization units, which will, reduce the air pollution around. So all these investments would, in a way, increase their expenses in the short run, right? And hence you'd say that the profitability is less. But if they don't do it, it would something would bite them in the future. Either the government would slap a pollution control board notice, or the communities around would complain. So yes, these are things which will paint a negative picture on the P&L side, but you should definitely look at, for example, governance, right? Or for that matter, even the social impact. If the social environment is good, then more and more talent would come and, join those companies. So what they are doing for their clients, their employees, even the communities around, even for, the various stakeholders, that is very, very important. Whether on the governance part, are they lobbying a lot? Are they, politically connected, or they are using their power to, twist around policy making? Also the board composition, whether they have an audit committee which is proper or not. So all these things are nitty-gritties which currently you have to go to the annual report and also do some due diligence yourself. But in the future, definitely we believe there will be reliable indicators which would make the job easy for an investor.
Yeah, folks, so there is your list. So folks, if you want to know more about ESG, about green energy, do check out the Green Energy Smallcase, which is a portfolio of stocks that will benefit from the renewable energy sector developments and that you can track and invest in with your favorite brokerage account. Links in the episode description and in the show notes. That's a wrap on this episode of The Ideas Project. Hope you enjoyed this really deep, insightful chat with Arvind Kothari, and hope this helps you understand ESG and green energy markets a little better. Arvind, thank you so much for joining us.
Thank you so much for inviting me.
And sharing your insights with our listeners. Thank you.
Thank you for inviting me.
And folks, if you like this episode, do consider subscribing to the podcast and leaving us a review on Apple Podcasts and Google Podcasts. This podcast is powered by Smallcase. We will come back with more insightful conversations to help you achieve a well-rounded investment portfolio. Until then, bye-bye. See you in the next episode of The Ideas Project.
Hello, everybody. It's been another great week on the IVM Podcast Network. On Cock and Bull, Cyrus, Akash, Eklavya, and Antariksh talk about the American airstrike that took down the Al-Qaeda chief. On The Habit Coach, Ashton is joined by Dr. Gautam Das and Ravi Shroff of Microbiome Private Limited. They tell us about some habits to improve our gut health. On the Filtrip Coffee podcast, Karthik explores the emergence of tech-based education during the times of COVID. He has a very interesting conversation with Anjula Taneja of Oxfam. On Smarter with Sid, Siddharth explains how building a small community leads to a stronger brand identity. And on Misconduct, Raghavi and Nisha discuss the chilling story of Jolly Joseph from Kerala, who killed 6 members of her family. I'd like to remind you all about our merchandise once again. We got some amazing stuff out there with more coming soon. But go to the IVM Podcast website and check out our collection of t-shirts. You have to click on the shop tab and we'll take you to our partner Grow 91's website. Do follow us on social media. We're IVM Podcast on Twitter, Facebook, Instagram, and LinkedIn. And remember, if you're enjoying this show or any of our other shows for that matter, please do tell a friend. Hey, you want somebody to talk to your shows about, right? So talk to them about them. Also, don't forget to rate us on any platforms you're listening to us on. And remember, you can check us out on YouTube. And finally, we would like to thank our sponsors this week, Bode Lifestyle, Smallcase, Capgemini, and Intel vPro. Thank you so much for making this possible.
A wise man once said, traveling, it makes you speechless, then turns you into a storyteller.
Well, listen to such travel stories and experiences exploring India on the Musafir Stories with us, Saif and Faiza.
Catch us on the IVM website, app, or wherever you get your podcasts from.